NOU.V molded graphite has been trading around the $6 mark for a long while now. And would it be a problem if the company wasn't trading at $20 per share just last February? So let's talk about it. What's up with that insane price drop? Why did it happen? And most importantly, NOU.V molded graphite, what are we waiting for? Hey value investors, how are you doing? My name is Stijn, welcome to my YouTube channel. So before we can explain why NMG dropped so much, we first need to explain why NMG was trading at $20 per share in the first place. Well, I would say there are two main factors. First, fundamentals, we'll talk about it in just a bit. Second, market-wide hopium. During the last months of 2020 and the first months of 2021, any stock that had any ties to electric vehicles at all shot up like crazy. For example, NIO went up almost 2000%. Workhorse, a company which isn't doing any revenues at all, shot up 2000%. Also NMG, who shot up 2000% too. And of course, after the whole EV segment shot up like crazy, it needs to cool down, which is what we are experiencing right now, and that is fine. As promised, we'll now talk about the fundamentals of NMG. So NMG is developing two main facilities. So first, the Metawinie high purity flake graphite mine, as well as the Bacon Core lithium-ion anode material plant. And first off, we are expecting 100,000 tons of flake graphite coming out of the Metawinie mine starting from 2023. Roughly 60 out of those 100,000 tons will go into the Bacon Core anode material plant, from which they will produce 42,000 tons of anode material, 3,000 tons of purified jumbo flakes, 14,000 tons of micronized graphite byproduct, and of course the chloride byproduct as well. So 40,000 tons of flake graphite at market conform prices in combination with 45,000 tons of anode materials at market fair prices results in a revenue of $530 million by the year 2025. Let's assume a future price to sales ratio of 8, which I think is conservative in the current market. So that revenue of $530 million times the future price to sales ratio of 8 results in a future market cap of $4.2 billion in the year 2025. Currently fully diluted, there are 57 million shares outstanding. So we use that number and we'll also slap on quite a bit of future dilution. 20 million shares to be exact. Honestly, I'm not expecting that much dilution. To complete NMG's two facilities, they will need to raise capital, and for that they need to dilute. So we are factoring quite a worst case scenario for dilution. Anyways, 57 million plus 20 million results in 77 million shares outstanding in 2025. So we divide that future market cap by the future shares outstanding, and that results in a future share price of $55 by the year 2025. Or almost 10x potential from today's prices, which is quite a good value proposition. So we use my discount rate of 15%, which I see as my opportunity cost. So $55 as future value in 2025 results in an intrinsic value today of roughly $32 per share. But of course, we're not done here. We value investors never pay intrinsic value. We want some kind of margin of safety so that we can ensure we get our attendees. That is to ensure we get pretty good profits even if we make mistakes in these projections. Therefore, slap on a margin of safety of 50%, and that results in my buy target of $16 per share. By the way, all these prices here are in US dollars. As a reference, my own cost basis is slightly below $10 per share for NMG. So we now better understand NMG's fundamentals. But that leaves the question, why did the share price drop so much anyways? Well, that is because of dilution. See, NMG starting up two very interesting but also very expensive projects. And to finance those properties, they effectively created 10 million shares extra just last June. For those 10 million shares extra outstanding, they received $70 million US. So now NMG can use that money to create value for us shareholders. However, investors fear dilution like the plague. Their thought process is the following: if there are more shares outstanding, the percentage you own with your current shares decreases. Therefore, dilution is bad. Right? Well, dilution can be pretty bad, but the answer is more complicated than that. For example, if NMG is able to invest that money effectively and increase their future profits, then your percentage owned decreases. But your total pie size still increases because the company increases as well. Long story short, I think this dilution is a good thing. We need to keep in mind that without extra money, there will be no mine. And without extra money, there will be no Bacon Core. There will be no anode material plant. NMG needs to invest the money today to become extremely profitable in the future. And that should be expected. It is a startup after all. And starting up a world-class facility for sure takes a lot of money. So to summarize this part of the video, temporarily your slice size might decrease. But if NMG can use that money effectively and invest it wisely, then the pie will increase more than your slice decreases. And then we investors gain more value even though NMG diluted. Thus far we talked about the market, NMG's fundamentals and the reason the share price dropped so much. I think that leaves us to the future. So what can we expect from NMG going forward? Are a couple of things, but first Bacon Core. We are expecting Bacon Core to be semi-operational starting from the first half of 2022. At that point they will start generating 2000 tons of anode material, which will generate quite healthy amounts of cash flow for the company. This is also what allows them to form strategic partnerships all around the world. And that leads me to the second thing we're waiting for. NMG has teased us a lot with a potential partnership, with for example a Tesla, a Ford or even GM. So we are awaiting them to announce a partnership, but this one will probably still be a little while out. We're also expecting more dilutions and more debt burdens for NMG. This one we can expect around Q1 2022 as per the CEO. So the future of NMG is for sure mixed. We're expecting very interesting news during the first half of 2022, a lot of de-risking. But we're also expecting quite a bit of dilution, which a lot of investors will find pretty scary. So I want to end this video off with the following. If you aren't okay with the stock price dropping 70%, NMG for sure isn't the stock for you. Cut your losses, move on and perhaps focus on index fund investing. However, I will stick with my highest conviction stocks. So that is Regeneron, Palantir, Grotomic and NOU.V Graphite. Your highest conviction stocks might be similar or they might entirely be different. That is one of the beauties of investing. And I think that's about it. I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want to talk about next, and I'll see you guys in the next one. Peace.